Hello, active traders, and welcome to Forex Success Strategies. This is Ken Calhoun, president of the Day Trading University, along with my co-host or co-presenter, Peter Bain from ForexMinter.com. We're pleased to bring you Forex Success Strategies in this special preview webinar tonight. We're going to be looking at a number of new strategies designed to help you improve your Forex day and swing trading success, adding a lot of new strategies we've never covered in our previous events, plus updates for how to trade our current market. So really excited to be working with Peter Bain, the world's top Forex minter. I only work with the best, and Peter's the best when it comes to Forex. I learn a lot from his events as well. So with that, I'll turn it over and welcome Peter Bain. It's good to see you here.
Ken, thank you very much. It's always a pleasure to share this podium with you, and looking forward to my presentation and yours. And to the audience members, thank you very much for taking the time out of your busy schedule to be with us today. And Ken, I assume I have control, right?
That is correct.
Okay, good. Thank you. Okay, let's get going. What I'm going to do initially is just run through the agenda for the next 3 webinars: solving Forex trading problems, Forex trade management, scaling in, and risk management with chart examples, updated strategies and current markets updated, breakout, pivot, and scanning tactics, additional entry and exit patterns and technical signals to use, trade alerts, you're going to get some of those today, charts to avoid, common traps that get traders into trouble, what the institutional traders are up to, hot off the press, and other surprises. I thought I'd start off, I caught this in one of the newspapers. The U.S. dollar is still king. It's still the world's reserve currency. From the U.S. Trust report, the greenback accounted for roughly 62% of global central bank reserves as of the fourth quarter of 2012, according to the IMF. A share down slightly from 2008, but relatively constant over the post-crisis years. It crushed the beleaguered euro. So the U.S. dollar isn't going anywhere too fast. All right, I'm going to be talking about the institutional traders to start with. But at the very beginning, I thought I'd throw up this slide on copper. And what we're looking at here, institutional traders, the orange line, hedge funds, the green line, this is the kind of divergence that I look for. And to make a fat story thin, what I'm seeing here on copper is over here on the bottom right, you can see the commercial traders or institutions are heavily long copper. What has that got to do with anything? Well, copper is used in industry and automobiles, housing, and so on. So there's strong demand for copper, which augurs well for an improving economy. My gift to you, pairs to trade. We're going to follow the leader with hot off the press institutional alerts. And I'm going to start with the Aussie. That's the AUD/USD pair. The big dogs have spoken. As at last Friday, this is what it looked like for the Australian dollar. The divergence that I look for, commercial traders extremely long, the Aussie, hedge funds extremely short. This is the divergence that tells me that we should expect a turnaround in price on the Australian dollar. Now, I'm going to follow the Aussie all the way through the next 3 webinars, so be sure to be here because you and I are going to follow this thing all the way through the next 3 to 4 weeks. Over here on the bottom right of your screen, you can see the commercial traders, their positions well above the waterline here, heavily long on the Australian dollar. Now, when you look down here, you can see the red line is price. Price has been tumbling on the Australian dollar. Now that the commercial traders are extremely long, you want to believe that very shortly this red line is going to turn up and the Australian dollar is going to rise. Now, let's just go back in history to April of this year. Over here, you can see the commercial traders, that's the institutions, were extremely short the Australian dollar. That was going back to April of this year, and you can see what happened to price. Price fell all the way down to where it is now. And this was completely under the control of the institutional traders. Now that they're heavily long the Australian dollar, you want to believe we're going to see some upward price action on the Australian dollar. Now, for you futures traders, this is a futures chart as at last Friday. You can see price action tumbling. The big dogs are long right here, and we're looking for a turnaround in price here. Hasn't happened yet, but we're going to keep an eye out for it. Going back in time, back to April, you can see that the big dogs were short, as I've noted on the screen, the Australian dollar, and you can see what happened to the Aussie. It tumbled. And now we're going to wait for the big dogs to weave their magic again, and we're going to see this currency rise from the ashes. That was a futures chart, and this is the yearly chart, 1 day over 10 years, and a really compressed chart. I wanted you to see what's happening here on the AUD-USD pair. You can see that price has broken through this level of support in here. And what we're looking for is for price to retrace and get back up above that support level. That's the daily chart. This is the hourly chart, fairly recent. And you can see downward price action, the 50 exponential moving average below the 200, good angle and separation. So this currency pair is really still tumbling, and as I said before, we're looking for a turnaround, and we're going to keep our eagle eye out for this. Now, this just in, just before this webinar, I had a peekaboo at the AUD-USD pair, and lo and behold, price has jumped above the 200 exponential moving average. MACD is overbought, so I wouldn't be looking to issue a buy in here. I'd be waiting for price action to weaken. I'd be looking for MACD to go below the waterline, and then I'd be looking for a trade to the long side. You can see how MACD works. You can see back here where price became weak, MACD went oversold, then punched up through its trigger line. Good place to go long right here. Same story over here, a good long trade right there as MACD punched up through its trigger line from being oversold, and you get the idea a third time over here. So this is what we're looking for on the Australian dollar. So pay attention to the hourly chart. You can certainly also keep an eye open for the 15-minute chart, and usually what we like to do is execute our trades off the 5-minute chart to get a good entry point with limited risk. Let's have a look at another currency, the euro. A little bit of a different story here. You can see at the top of your screen commercial traders going short the euro, the hedge funds long. Now, this is not enough of a divergence for me to call anything on the euro. I'm just pointing out that the sentiment amongst the commercial traders is to the short side. And looking at this graph down here at the bottom of your screen, bottom right of your screen, you can see the commercial traders are now below the waterline. And you can follow how this works. This red line is price action. And you can see back in June, just last month, you can see the commercial traders were extremely long, or certainly long on the euro. That drove price up. It peaked here, and then it fell off in concert with the commercial traders going short, ever so short on the euro. So another currency to keep an eye on. Futures chart for you futures aficionados. What we're seeing here is a level of support for the euro. We're actually expecting price action to fall from here based on what we saw with the commercial traders. Let's just go back in time. Up here on the euro, the commercial traders were extremely short in and around here, and you can see what happened to price. Back here, in the May time frame, May-April time frame, the commercial traders were long and price rose. So the institutions trade thousands of lots worth millions of dollars at a time, and as such they have a direct bearing on what happens to price action in the Forex market. Now, I don't have time today to show you where I get this information from. I will show it to you in the upcoming 3 webinars. So be sure to be with me because you'll want to know how to get this information and how to read it properly. This is a weekly futures chart for the euro. You can see good support. This is a good support level here. This is where price was last Friday. And as I said before, we're expecting further weakness in the euro due to what the commercial traders are doing. This is a compressed chart of the EUR-USD pair, fairly recent. Good level of support in here. That's where price was when I took this picture. And of course, we'll see further price weakness. This is the recent hourly chart for the euro. 50 exponential moving average below the 200. Good angle and separation. Lots of weakness in the euro. As I said just moments ago, be sure to come back for the upcoming webinars because I'm going to show you how you can get at this information and how to read it. Now, let's talk about picking your own pairs to trade. I've shown you how you can jump on the coattails of the commercial traders, and I'm going to show you how you can pick your own currencies to trade. I'm going to apply the age-old golden rule, which has been around as long as trading has been around. And basically, what it says in this instance is buy the dips in an uptrend. In other words, buy weakness. I'm not going to talk about the other half of the golden rule, which is to sell the rallies in a downtrend, because I want to stick to the buy side. I have enough examples here that I don't need to have a look at any short possibilities. Now, to make a fat story thin, the platform that I use has 26 pairs. You can see them listed on your screen. Now, I picked out 4 that I really liked over here. These 4, all paired with the yen. So 4 made the cut, and the rest didn't. You can see the ones that I rejected over here in the middle of your screen. I'm going to show you why I picked those 4. It's just interesting that they're all paired, these currencies are all paired with the yen. I didn't want it to be so, I didn't wish it to be so, it just turned out that way. Just proves that the process that I use to find pairs to trade does work. All right, you only have to interrogate 26 currency pairs versus thousands of stocks to find good trade setups. What we're looking for is a consistent uptrend on both the daily and the 1-hour charts and no wild price action. Then it becomes simply a matter of buying the dips in the uptrend, that is buy weakness, off the 1-hour chart or lower charts. By buying weakness and placing your stop 20 to 30 pips on the other side of the entry point, in all likelihood you won't get stopped out. The only requirement here is that you be patient and wait for trade setups. In other words, we're looking for a situation where we want to buy dips in the uptrend. Okay. Let's have a look at what I liked about the dollar-yen. This is the daily chart. These are recent charts, by the way. This is the daily chart for the dollar-yen. You can clearly see an uptrending market, the 50 exponential moving average above the 200, good angle and separation. Flipping over to the hourly chart, same story. 50 exponential moving average above the 200, good angle and separation, a nice uptrending market. This is what I look for. Both charts are in sync, and now what I'm looking for is I want to buy weakness on this pair. And by weakness, I mean if you go back here to the New York Open on this particular day, you can see that MACD was oversold. This is when you want to entertain the notion of going long. So what I'm looking for now is further weakness in this pair before going long. So that's the dollar-yen. Now we're going to have a look at the euro-yen. Daily chart, same idea. You can see it. The trend is up. Hourly chart, the trend is up. And that's further evidenced by the fact that the 50 exponential moving average, pardon me, the teal line, I guess it's teal, is above the 200 exponential moving average. We still have angle separation, and the trend as delineated by the 200 moving average is up. So what I'm looking to do here on the euro yen, pardon me, is to buy weakness, as in back here at the New York Open. And over here, you can see MACD being oversold, and this is exactly what we look for in an uptrending market. Now we're going to move on to another currency paired with the yen, the Kiwi yen. This is the daily chart. Again, you'll notice on the daily chart, price action trending up. The 200 exponential moving average, nice and smooth, a nice ride up. And again, the hourly chart for the Kiwi yen, same story. Not only that, we had a golden cross back here, which is bullish as far as Japanese traders are concerned. A nice swing point here at the New York Open. MACD went oversold when it punched up through its trigger line in and around the New York Open. That was a perfect buy opportunity. So that's what I'm looking for here on the Kiwi yen, is further price weakness so that we can initiate a long trade. And now the CAD yen. Daily chart trending up. Hourly chart trending up. Same story. Golden cross back here. A nice swing at the New York Open. That's 8 a.m. Eastern Time on this particular day. That would have been July the 2nd, I believe. MACD had gone oversold. When MACD punches up through his trigger line, that's exactly when you go long. And so if you're wondering what this has to do with where we are over here, what I want you to do is keep an eye on these pairs. I want you to look for price weakness in the 4 pairs that I've mentioned here. More specifically, I want you to keep your eye on MACD, because we want MACD to go oversold, and then when it goes from oversold to trending up, punching up through its trigger line, that is your entry point. Now, all I ask of you is that you be patient. Patience is a virtue in this business. Who could have guessed? Now, bingo time. This is the euro yen. You remember what I said about the euro yen just moments ago. I'm looking for price weakness. Well, look at what happened today. Price fell off. MACD went below the waterline. And this is exactly the sort of trade that I want you to be on the lookout for. What I'm looking for here now is for MACD to punch up through its trigger line as price advances, and that's your signal to go long. This isn't rocket science, by the way. This is pretty easy stuff. You can see earlier trades back here, and now going to engineer another trade simply by following the basics of buying when MACD punches up through its trigger line from being oversold. And we have price weakness. Okay, this is still on the euro yen, and we want to show you here on the hourly chart. This is over 30 days. This is where we were just looking at price action right here, MACD below the waterline. You can see that where price action is right here is at a level of support that held back in through here. And so what I'm looking for is for price to bounce off of this level of support, all the while MACD punches up through its trigger line. One further note on lines is we have a nice common sense trend line here encapsulating the lower reaches of price action, ending right here, which is where price is right now. Actually, price has advanced from here. If you look at your own charts, you'll notice that price has advanced from where I've circled it on this chart. And this is actually a more recent chart. I took a picture of this, a screenshot of this chart just before airtime, and you can see that there's the hammer. Price fell off. We have a nice swing point here facilitated by Steve Nissen's hammer. Price is starting to rise ever so slowly. I'm still looking for MACD to punch up through its trigger line before I do anything. I don't want any false starts here. But when MACD finally penetrates up through its trigger line, I'm going long. So we're not far away from that. I wasn't looking for correlated pairs. My research was based on looking for pairs that met my parameter. consistent uptrend on both the daily and 1-hour charts. It just so happens that the 4 pairs that were screened in accordingly were the 4 correlated pairs: dollar yen, euro yen, Kiwi yen, and CAD yen. So the screen works. Those 4 pairs are all trending up on both the daily and 1-hour charts. Now we simply look to buy weakness, that is buy the dips in the uptrend, off the 1-hour chart or off a lower chart, like the 15-minute chart will work just as well. And you want to execute your trade off the 5-minute chart, as I said before, to get a good entry point with limited risk. So now what I want to do is I want to go through the rejected pairs just to show you what my logic was in rejecting them. Now, there's a little bit of time and effort here, a little bit of homework before you start trading. What I want you to do is to go through all 26 pairs and do exactly what I've done here. It doesn't take long to do it, and through that filtering process, you'll end up with 1 or more pairs that follow the parameter that I'm talking about in this presentation. So let's start with the Swissy yen. The daily chart trending up, but the hourly chart has flattened on me. You can see the trend indicator, the 200 exponential moving average, has gone stale on me. I'm not interested in that pair. Moving on to the Aussie Kiwi. Daily chart trending down. But the 50 is something wrong with the 50 EMA on the 1-hour chart. It's trending up. Perhaps we're having a change in price momentum. So I'm going to take a pass on this pair. I mean, why would you fool around with a pair? We've already got 4 good pairs to trade. We don't have to fool around with pairs that don't look like they're going to cooperate. Moving on to the pound Swissy. You can see clearly here, we had a death cross back here, by the way. 50 exponential moving average punching down through the 200. Price action on the daily chart down. But when we move over to the 1-hour chart, price is very erratic. It looks like kangaroos jumping up and down on speed. You want to avoid a chart like this, like the plague. So we take a pass. And we move on to the Aussie CAD. Price action on the daily chart is trending down. And price action on the hourly chart is also trending down. Now, I could very easily have screened these in, or this pair in, because what we would be looking to do here is selling the rallies in the downtrend, like here, when MACD goes overbought and then punches down through his trigger line, a good short opportunity here, same idea over here. I just felt that it would be easier to talk about long trades versus short trades, so I took a pass on any pair that looked like it was setting up for a good short trade. Same idea here on the Kiwi dollar. Both the daily chart and the hourly charts trending down, and no reason why you couldn't look for a good short opportunity in here when MACD goes above the waterline into overbought territory. Here's 2 trades right here and back here as well. You get the idea. You want to be selling strength, selling here, selling here. If we were going to trade this pair, we would want to look for strength and sell strength. And the reason we want to sell strength is because we would then put our stop 20 to 30 pips northward, and we're not going to get stopped out because we're in a downtrending market. So you want to sell strength in a downtrending situation like this. Pound dollar. There's our death cross back here on the daily chart. Daily chart trending down. And same idea, yeah, the daily's trending down, the hourly's trending down, but price action's pretty anemic. It's not very exciting, and why would we fool around with a pair that has this kind of price action when we've already seen pairs that are performing better? By the way, never fall in love with a currency pair. This is all about making money, okay? And you want to work with pairs that are cooperated, period. You don't want to trade the euro because your friend or neighbor's trading it. You want to trade a pair because it's setting up as I'm showing you the parameter here today. Dollar, this is the USD CAD. The daily chart is up, and the 1 hour chart is up. And what we could be doing here is buying weakness. Daily up, 1 hour up. Price action's not all that exciting. This was a good buying opportunity right here. Price coming down and nudging the 200 exponential moving average and then bouncing off of. This is actually a hammer. So this would have been a good buy. But not quite as exciting as the 4 that I screened in. The CAD Swissy, oh boy. When I see this, I want to throw up. This is the CAD Swissy daily chart. Notice the trend is down. There's the death cross back there. The trend is down. But look at the hourly chart. It's trending up. So why would we want to fool around with this pair? These two charts can't get themselves in sync, and I'm not going to waste my time on a pair like this. The disease is spreading. The pound CAD, the daily chart is up. Golden cross right here. And the hourly chart is down. We have a death cross here. So this is a negatory for me. We're going to take a pass on this one. Pound Kiwi. The trend is up. Golden cross. But on the hourly chart, the trend is down. So what's going on here? We're going to take a pass on this one as well. The Euro Swissy, the daily trend up. The 1 hour chart is up, but we've got some pretty wild price action in there. I'd be a little bit leery of this. That said, some good buying opportunities in here. You can see going back here and here, trades facilitated by MACD punching up through its trigger line. The trading is pretty easy when you pay attention to MACD because it tells you when to trade. MACD punches up through its trigger line, buy. Punches up through its trigger line, buy. Not tough stuff. Kiwi Swissy, the daily trend is down, death cross right here on the daily chart, but the 1 hour is trending up. Those two charts can't seem to agree with each other, so another pass. Kiwi CAD, I hope I'm not boring you with this, but I just want to get it through to you how you screen through these currencies and pick ones that you want to trade. This is the Kiwi CAD, the daily trend down. These are recent charts. Death cross, 50 exponential moving average punching down through the 200. But look at a wild price action in the hourly chart. You could get yourself into a whole lot of trouble with this kind of price action. Aussie Swissy, the trend, price action trend on the daily chart down, the 1 hour chart up. And so again, we're going to take a pass on this. Aussie Yen. The trend on the daily chart, as denoted by this interim EMA, the 50 EMA is trending down towards the 200 exponential moving average, perhaps indicating that we're having a shift in price momentum. Actually, the 200 exponential moving average is starting to drift off as well. So you look at, it's interesting, you can see what's happening in the daily chart, then you look at the hourly chart, and the trend is up. So no consistency there, and we're going to take a pass on that one as well. Pound Aussie, the trend up. We have a golden cross right here, which is bullish. But on the hourly chart, we have a death cross. And like I said in my opening remarks, what I like to do is I like to trade pairs where the daily and the hourly charts are trending in the same direction. You'll always find one or more pairs that follow that paradigm, so why not stick with them? Pound yen, the daily trending up. You can see that. And then we move over to the hourly chart, and we have a death cross, bearishness creeping into the hourly chart. So this goes into our waste bucket as well. And by the way, you can go through these currencies often. I mean, it's actually kind of fun. It doesn't take that long, but you can do it as often as you have time to do, maybe once a week or maybe more often during the week. Here's the dollar Swissy. For all intents and purposes, price action is pretty flat. I guess you could say it might be up, but it's more flat to me. And then we look at the hourly chart, and it's trending up. But price action, if you look at price action, there's not much price action. It's pretty anemic. And chances are you're not going to really find some exciting trading opportunities with this pair. EuroCAD, I think we're getting to the end of the list. On the daily chart here for the EuroCAD, price action trending up after we had the golden cross back here. And then we move over to the hourly chart, and ARG is right. We have a death cross on the hourly chart, price action trending down in opposition to what we saw on the daily chart. So this one gets torpedoed as well. Euro Aussie daily chart, you can see what's happening there. And then we go over to the hourly chart, and the EMAs are pretty flat. As a matter of fact, the 50 exponential moving average has come down and punched through the 200, and then we have anemic price action. So we're going to take a pass on this one as well. Euro Kiwi, daily trend up. I hope I'm not boring you with this, but I'm hoping it's sinking in as well. The Euro Kiwi daily price action up, and the 1 hour is down. You see it? Price action trending up on the daily, trending down on the hourly chart. These two guys can't get their act together, so I'm not going to play ball with them. Euro Pound, I believe we're going to come back to the Euro Pound a little bit later. Anyway, this is the Euro Pound daily chart, golden cross, nice uptrending situation here. And here we have the hourly chart. I guess I could have screened this one in, but chose not to for various and sundry reasons. You can see the trend is basically up as denoted by the 200 exponential moving average. We have a golden cross right here, a nice trade at the New York Open back here. This is a downtrend reversal pattern. I'm going to talk about that a little bit more coming up. Okay, now that I've gone through all 26 pairs, and I hope you're still with me, I want to further illustrate that there are, in addition to picking the right pairs to trade, you've probably heard me talk about this before, but there are certain times of the day when you want to trade as well. Now that we have 4 pairs that we want to trade, it's a matter of, well, when are we going to trade these pairs? What times of the day? Here they are. Please write them down. 3 a.m. Eastern Time is the London Open. 8 a.m. Eastern Time is the New York Open. 11 a.m. Eastern Time, London close. 5 p.m. Eastern Time, New York close. 7 p.m. Eastern Time, Tokyo Open. 9 p.m. Eastern Time, Singapore Open. I'll just leave this on the screen long enough for you to finish writing these down. These are times that you should be at your screen looking for trade setups. Now, if you have a day job, not to worry. Maybe you trade the Tokyo Open or the Singapore Open. Depends on where you are on this wonderful planet of ours. There's opportunities in here for everybody. Now, when I say that the New York Open, the London session opens at 3 a.m. Eastern Time, the Forex is not a building with doors. It's not people coming to work and leaving for work. It doesn't happen exactly at 3 a.m. The window of opportunity might be from, say, 2 to 4 a.m., in and around 3 a.m. But you should be, if you can trade the London Open, you should be at your trade station in that window of opportunity, say from 2 to 4 a.m. Eastern Time. Of course, the same logic applies to the other times that I've listed on your screen. I would say if I had to pick 2 times in here that are the most exciting, it would have to be the London Open and the London Close, because they are the busiest sessions in the Forex. That's where a lot of money moves at those two times. Okay, I assume you've written these down now. Let's move on. Now, when I picked the 4 pairs that I showed you at the outset of this presentation, I wasn't looking for correlated pairs. I wasn't looking for commonality between pairs. I was just looking for pairs to trade. And it just so happens that I screened in 4 correlated pairs. Pretty cool. It just goes to show that my screen works. There they are, the dollar yen, the euro yen, the Kiwi yen, and the CAD yen, correlated pairs, which means they're all trading the same way, which means you can pretty much trade all 4 at the same time. You don't have to just trade one. Okay, let's have a look at that. Here is the dollar yen. And here we are at 8 a.m. Eastern Time. I mean, this is pretty easy trading. Look at this. Just follow along with me for a minute. Here we are at 8 a.m. Eastern Time on this particular date. This is July the 2nd. MACD is oversold. We have a swing at the New York Open, which happens quite often. MACD eventually confirms this trade as being a bona fide trade. But this is the sort of thing that you want to look for. You don't have to be at your screen all day long. Euro yen, same idea. A little bit more dramatic price action at the New York Open on the 2nd of July. We have a hammer. Price action swoons. We get Steve Nissen's hammer, and then price swings. And this is where you make your money. Price swings, all the while MACD is telling us to buy, buy, buy. There's your trigger at the bottom of your screen. Kiwi yen, again, we're focusing on the New York Open. This is one of the 4 correlated pairs. 8 a.m. Eastern Time. Price comes down and nudges the 200 exponential moving average. MACD tells us to buy right here. MACD punches up through its trigger line. You're in. Pretty straightforward. Moving on to the Canadian dollar paired with the yen. Again, we're stuck on the New York Open. There's 4 pairs tradable at the New York Open. 8 a.m. Eastern Time, another hammer, price swoons. We get Steve Nissen's hammer. MACD tells us to go long right there when it punches up through its trigger line. So we have a confluence of events here. We have price coming down and nudging the 200 exponential moving average. We have a hammer. We have MACD punching up through its trigger line. You don't need more green lights than that to pull the trigger. You're going to go long right in about here. You're going to put your stop, let's say 30 pips below. Price action invariably will come back to test your patience. And here it comes back to try and take out your stop. But of course, our stop is way down here. Doesn't work, and so price action carries on. In the meantime, we've gone long back here, and we held the trade. Why not hold the trade? We bought weakness. Our stop is down here. The trend is up as delineated by the 200 exponential moving average. Why would you bail on this trade? You just hang on and make more and more money as price action rises. Okay, others. Let's get off of New York and let's have a look. Ken, you could perhaps let me know if I'm running over time. I forgot to put my watch in front of me. Anyway, sorry about that.
Well, that's fine. Yeah, as a preview event, yeah, it's good to give traders a lot of good information like this. So it's certainly good to see. But yeah, it's we're getting about that time. So yeah, it'd be good to.
Okay, I'm just about winding up here. This is thanks, Ken. I appreciate that.
Sure.
Here we have the Aussie Swissy, and remember I told you that there were a number of times of the day when you should be trading the Forex. Well, this is the Tokyo Open, 7 a.m. Eastern Time, or 7 p.m. Eastern Time. I look at this price swoons. 7 p.m. Eastern Time, MACD punches up through its trigger line from being oversold. Why wouldn't you buy here? Same logic over here. We have an elongated hammer. MACD punches up through its trigger line. We get a nice swing. There's 2 good trades back to back. New York close, 5 p.m. Eastern Time. Nice swing. MACD told us to go long right here. MACD is a beautiful indicator. I love it. Same thing over here. MACD told us to buy right here. London close. one of my favorites. This is, I'll say 11:30 a.m. Eastern Time. A nice swing facilitated by a quasi-hammer. This is where you make your money on these swings. London close, again, for the Euro Aussie right here. I believe that's a spinning top. Again, MACD tells us to go long right here. You don't need to be brilliant to do this type of trading. Again, we're sticking with the London close, 11:30 a.m. Eastern Time, spinning top, MACD confirming the trade right here. I hope you're getting this, because this is pretty simple stuff. This is the dollar Swissy London close, I believe was right here on the shadower right here. And we got confirmation from MACD down here going oversold, punching up through his trigger line. We're in the trade. And if you want to know how long to hold on to the trade, there's parameters. You can either hold on to the trade as long as MACD is above its trigger line and get out here, or you can hold on to it just because the trend is up. As long as the 50 exponential moving average is above the 200, you've got angle, and you've got good angle and separation, why not hold the trade? New York Open, I think we've killed that one to death. 8 a.m. Eastern Time. MACD tells us to go long after the hammer right here on the Euro Pound. Okay, this is where Ken and I are going to look at the same chart, and we're going to tell you what we see. I'm going to start off, and then I'm going to turn it over to Ken, and we're going to focus on the Euro Pound, and I want you to just give 30 seconds. Do you see three good trades here? I'm going to show you what I see, and then Ken's going to tell you what he sees. Two great minds looking at the same chart to see what we can identify. So let's get going here. I'm sure you've seen them. There's the first trade right there, golden cross. There's the second trade right here, MACD telling us to do so at the New York Open, confirmed by this hammer. By the way, this is a downtrend reversal pattern. Down, across, and up. Leg 2 is usually the same distance as leg 1. So we went long here. We want to know how far price action is going to go. Well, it's going to go the same distance as leg 1 over here, leg 2. So that's our profit potential. And of course, we're going to hold as long as MACD is above its trigger line. That's what a downtrend reversal pattern looks like. And there is the third trade right here, MACD punching up through its trigger line. And there you go. Three good trades over a number of days, and I hope that this has been instructive. And Ken, I hope I didn't take too much time, but I'm going to turn it over to you now, and you can talk to this chart as well.
Oh, great. No, very outstanding. You're very generous with your content, as I'm sure all the traders will agree with me. I always learn a lot from you, learning how to use things like the MACD crossovers updated with the current correlated pairs against the yen, along with the death and golden crosses and candles and the rest of it. So yeah, really good, very brilliant technical look at exactly how to trade these things. So that makes a lot of sense. So thanks very much. A very good presentation. Well done.
Thanks for the kind words, Ken. It's always a pleasure working with you.
Yeah. Well, you're the best. So I always learn a lot from you, and I like to jot down notes here on how to do things. So I appreciate it. So good stuff. Well, let me go ahead and take control. And what I will do is, first of all, thanks again, everybody. Give Peter a round of applause. That was a very good presentation. He taught you exactly what you needed to look at for how to use some of our success strategies. He'll be covering a lot more. He's very generous with his time and knowledge, so that's a big benefit. That's one of the reasons I like working with Peter so much. He knows what he's talking about. He knows how to trade, and he gives world-class content. So good stuff. Let's see.
Thank you, Ken. Let me just accept this that you're on now.
Well, certainly.
Okay, there, you're on now.
Okay, great. Well, I've taken the control, so I've got the same chart. So we're in good shape. Okay. I'll take it from here.
Good.
Let's see. To add to what Peter said, one of the things that I look at on this particular chart, I also saw three entries. Mine, though, the first one is right after this cup pattern. I'm an expert in, I use cups. So this is the first cup. What I call a second chance breakout is when you see a wide whole real body candle at the right side of a cup. Everyone see the cup pattern? That would be trade number one, and then you could scale in on this golden cross. As Peter observed, that's another good trade opportunity. The where to exit is answered as soon as it loses support under the 50 EMA. So as soon as it gets 20 to 30 pips down and starts to travel with one or two candles under that, that's the first sign to get out because sellers are coming back in. You can always sell short again on a cut pattern breakdown there, and then obviously when you see a bullish hammer here, you can buy 20 to 30 pips is what I like to use on the reversal and catch the upswing. So yeah, very good, similar thought process, and good approach, Peter. It's a very good chart. You came up with this one, so it's a very good one for us to work together on. And a shout out, thanks to Vic Young for the suggestion that Peter and I look at a chart together now and then, and a really good way to put two great minds together. So thanks, Peter. Very good presentation.
Thank you, Ken. Appreciate it. I really, it's interesting to see how you approach a chart. We're common in many respects.
Yeah, because you know what you say works. I mean, that's what it comes down to. Is that, Peter, what you teach works, and what I teach works. So it's good to be working together for the traders. So, hey, with that, let me go ahead and jump into my presentation. Everybody, welcome aboard. This is Ken Calhoun from the Day Trading University with Peter Bain from ForexMinter.com. I wanted to start off by saying thanks to everybody. We're actually up to 213 people registered for tonight's event, so really good turnout. And thanks so much to all of you for posting your thoughtful comments. A lot of really smart comments and questions from everybody. So thanks for making it a very exciting event, and great to see you all here. For those of you who are new to working with me, you may have seen me in Active Trader, Stocks and Commodities, speaking at the World Forex Expos and the rest of it for many years. Tonight I'm going to give you what I call my Forex Success Strategies Toolkit, and we're going to get started on some of the key things to look for in tonight's event. Some of the goals that I have: Forex Q&A. We're going to start off with a few actual questions from you folks. I've put them in the deck here, and we'll look at those with current market charts, solutions to top Forex challenges. I want to teach you how to scan to avoid trap charts. And Peter did a very good job of going through a number of different charts and why not to trade them. And for those of you who haven't been professional traders and you don't know the difference, it's really critical that you rapidly go through, say, the 26 and boil it down to 2, 3, 4 that are worth trading. Just as with stock traders, we want to keep a very narrow focus on those that have the best odds to work out. So I'm going to teach you how to avoid false breakouts updated for our current markets, how to use position sizing and scaling into trades, updated scanning, breakout, and pivot patterns to use, and wrap up with what I call a start-to-finish trading process with entries and exits. So let me start off with a couple of questions from you guys. These are actual questions that you posted, and then we'll jump right into the charts. First question from Sterling, and hey Sterling, thanks for posting earlier. Sterling says, it seems whenever I enter a trade, and this is something that we've all dealt with, the market reverses, as though the trading powers that be have it in against us, and I get stopped out usually for loss. His question, it's a very intelligent one, is how do you know when a trending market will continue long enough to make consistent profits? And one of the things that Peter and I both teach you in the upcoming Success Strategies training are the relative strength of trends and how to evaluate which of those are better than others. And we're going to look at a couple here in just a minute. In fact, let me go ahead and look at those right now. Now, I'm currently long in my real money trading account in the dollar Swissy because it's been in such a nice strong uptrend. Now, earlier, I like the dollar yen because, and I've been calling that one long for the longest time until we lost parity at the 100, right? So the dollar yen had been really strong until lately. It's starting to come back to strength here, as Peter observed too. The yen is weak, so all things against the yen are smart plays. One of the things that I'm trading right now, though, is the dollar Swiss because of, in fact, I was trading it today, was because of the breakout cut pattern continuations we see outside of these immediate trading ranges. So frequently you'll see a cut breakout. You might get stopped out for an initial stop and then sit on the sidelines as it runs up without you. Here's a rider downer. Tip number 1, re-enter on new cup breakouts 20 to 30 pips above each new cup high that you see, because frequently you may get stopped out. For example, when I trade a cup breakout, I'll frequently take a small stop, but I'll frequently re-enter on a secondary cup. And a cup just looks like the letter U, right? Just like the letter U. So every new cup breakout you want to be on top of. What you want to add to the mix is be more aggressive when you have an ADX over 30, trade the day after that. Okay, and that's something I've taught for many years. So you see the Sunday minor gap here. It's the obligatory Sunday gap there. But back on the 4th of July, you can see we did get the ADX over 30, right? That's the first time in days the ADX, that's the average directional index, invented by J. Wells Wilder. And I've been using this for over a decade in my own trades. Whenever the ADX comes from below and punches above that 30 signal, look for a breakout on the day after that. And that's the only predictive indicator I found, in addition to using the MA crossovers like Peter does, the 15200 EMAs. Very good approach. So you might want to test out using the ADX. And so I like to get in on successive new cups. So that would be entry 1, entry 2, entry 3, and build or scale into a position size entry. Now, this is just the dollar Swiss. One of the things that you want to do when you're trading the Swissy is look for continuation moves and start to scale out if the ADX starts to drop down here, down in the muck, down in 10, 15, 20. That tells you it's likely to go sideways. Right now, it's still in play. It's still in motion. So that's why I'm still long this, at least in my own trading accounts, because of the volatility we've seen. Now, I expect everyone's going to be selling the 98.40. So as a scaling in trader, a trader who always adds to winning trades on continuations, as you all should be, right? You always add to winning trades. If you're not doing that, start thinking about it. Add to your winners. That's how you, at least that's how I like to take the shots at wiping out the small stops, is by adding to winning trades. And the ones that do work out, even if it's less than 50%, those have the opportunity to wipe out small stops that you take trying to fish for the breakouts, as the ones that do work out do continue in your favor. So what I want you to do is use the 3-month daily candlestick chart and resolve to never trade anywhere within, say, 50 pips or so of the 90-day high, because that's where institutional traders, or as Peter called the big dogs, everyone who's long from down here, or the momentum traders, guys like me who are buying breakouts above the moving average lines, we're going to be selling to you up here, right? So you don't want to be that trader who's buying a false breakout, something that's reaching previous resistance. The trick is use the 90-day along with the 12-day, and that's really good for momentum trading entries to identify what's strong. Now, as Peter mentioned, I like this chart too. The dollar yen's a very good chart, especially interesting to me since it broke over the 100 a couple of days back on the 5th. We'll see if that's able to take out new highs. One of the things that I want to wait for, though, is what? I'm not going to, at least in my own accounts, I'm not going to buy the dollar yen until or unless the ADX does what? Breaks over 30 again. So if it punches over 30, you set a signal to buy it on new highs, but you don't trade inside the consolidation. So that's a signal, didn't take out new highs. So I'm waiting for another signal, then I'll start building a trade. That's another way to avoid false breakouts. So that gets at the answer. Hopefully that answered that question from Sterling. How will you know when a trending market will continue long enough to make consistent profits? You're never going to be consistently profitable on all your trades. You're going to take a lot of small stops. I mean, I'm a professional breakout trader. That's what I do. I buy new highs for a living. I specialize in the upper right side of the chart. That's what I do. It's how I trade. I buy new highs. You will take small stops on false breakouts that don't gain new strength. The way to filter for that is using things like the whole real bodies, the candles, specific candle and Western technical breakout patterns, the ADX, the cup patterns, and the rest of it to make a case for the strongest of the charts. Okay, so smart question. Now here's a few more that kind of get at the same thing from Ruben, Norman, and Howard. You guys were asking, and these are all taken directly from what you wrote in a few days ago, how to know when to enter a trade. What are the 5 most important elements for successfully trading Forex? Number 1 is small stops. Number 2 is adding to winning trades. Number 3 is trading the strongest breakouts, in that order. But we'll look at more. And Howard's asking, is the trader better off focusing on and developing expertise with one market or switching from market to market to find the best trending market for the current time? I would say some of both. On different traders that have different opinions. You need to have in your hip pocket a few things that you know how to trade like the back of your hand. But the problem is, or the challenge is, knowing, for example, how well I know how to trade, for example, a dollar CAD or whatever it is I'm trading. If it's in a consolidation market, I'm not going to try and force a trade. If it's consolidating sideways just because I know it, and this gets back to what Peter said, you don't fall in love with the pair. If it's, if it's something that's hot and everyone's talking about it and it's one of your old favorites, but price action isn't supporting the trade, then you don't take the shot. So one of the things you want to do is make sure that you're focusing on emerging new strength of whatever you're trading. So if I quickly flip through these charts, euro dollar looks good for trading at new lows or pivots above the cup pattern high. Again, I'm a mechanic. I tear apart these things. Euro yen, not yet, not unless it takes out new highs. Euro CAD, That's at a 12-day low. Look at those that are at 12-day highs and lows along with an ADX signal that tells you it's in motion. Your goal as a trader. And thanks, Louis. Hey, Louis, how you doing? It's been a long time, Louis. Yeah, it is being recorded. You're looking for entries and exits, preferably in trend, say 30 pips under the low, for those wide range charts that you can put a entry and exit from a momentum scalp. You know, if you're scalping this, here's a scalping day trade chart on a 5-minute candlestick. Obviously, you see hammer down here, so you don't sell until it loses such hammer support down here. We stay clear of consolidation, but every single time, if you're scalping the, your currency charts, always what I'm looking for is new cups, and then I'll hit it to sell it right under cup support. And some of the success strategy focal points or things that you want to focus on is recognizing and being able to put together instantly a visual pattern recognition approach that keeps you out of consolidation or downtrending ADX charts and in on those things that are taking out new highs, which is why I bought the dollar Swissy today, at least in my IB account. So that's why I trade. Now, Aussie dollar, that looks bad. That would end badly. Can everyone see, only, well, I won't make any bad comments, but I'll say only an inexperienced trader would try and take a shot at something like this. I love that phrase with Peter. It's like kangaroos jumping around on speed. He's exactly right. Look at that. Ching, 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 ching. Even I would be tough pressed to, gun to the head. I would be hard for me to dig money out of this chart. I mean, yeah, I might buy support on a bounce and sell resistance on a fade to channel trade it, but that's very risky and tougher to trade something inside a region like that than something that has much better continuous price action that behaves itself. And one point that Peter Bain made that I really like is the fact that you should have convergence across multiple time frames. If this is going up on a 12-day chart, then it better be going up on the day trading chart. It better be going up on my swing trading chart. And if it is, then I'll look to buy new highs. But if I see divergence, then we want to stand clear. And part of what Success Strategies is designed to teach you is how to visually, quickly scan through and identify the very best of the charts out there and how to trade them with much greater focus and precision. I mean, guys like Peter and I, we're old hands at this. We're mechanics of the trade. We know how to do this. And the goal is to, like for the fellow Star Trek fans, the Vulcan mind meld. We want to try and give you guys this stuff as quickly and effectively as possible, designed to help you make more effective trading decisions as we move. So let's look at some of the top challenges and solutions, some of the success strategies. And these are things that may not come to immediate mind, but these are things that, working with thousands of traders, this is what my traders have told me over the years and what I've extrapolated from working with them. One thing that you guys struggle with is weak entries. And as Sterling hit on this too, is you need to be able to scan for the strongest charts while avoiding false breakouts. And so one of the solutions to that is look for very specific chart pattern technicals and get your timing such that it's not obvious to the crowd. Where traders fail is you guys will buy obvious breakouts right above a previous high only to get stopped out. Or you'll sell support only to see it bounce against you, right? If you're that guy or that lady, if you're that trader, you're making weak entries. And one of the offsets, kind of to use a rotate the shield frequency. Sorry, I'm a sci-fi fan, but what you want to do as a trader is offset your entries slightly so that they're not at the obvious support and resistance levels. This is what professional traders do. It's what I do, and I want you guys to learn that. And I'll give you a couple examples coming up with charts. I mean, obviously I need to illustrate it with charts, but give some thought to that. Instead of obvious entries on choppy charts, that's the worst of the worst, trade slightly out of the, what's obvious to the crowd, because you're trading against other traders. Either you're trading with a guy like me, or you're trading against a guy like me, and my brother, professional traders. And you want to be the trader that trades smartly, not jumping the gun in front of the trade, but rather waiting for the trade to mature and get into the very strongest continuation plays without fear of getting into a false breakout. And the only way you do that is trade the very strongest signals. And that's what I'm a specialist in, is trading the strongest of the breakouts. That's what I do. So weak entries is something that many of you have as a challenge, and we're designed to, what we're doing in the Success Strategies upcoming events is, and tonight too, to get at some of the things we can share with you in this brief time we have together, is how to avoid weak entries. That's really important. Second, and it even rhymes, fail to scale. A lot of you do not scale or add to existing trades. Let me ask a show of hands. How many of you either type the letter yes or no And again, no harm, no foul. I'm not going to jump on you for not doing it, because I didn't do this for the first 6 years of my trading myself. So I'm the first to admit it took me a long time to learn how to scale in or position size. I was all, hey, let me trade the strongest thing and just put the trade on and hope it works out. And if it works out, great, ka-ching. If it doesn't, well, oops, there's a stop. But I didn't scale in gradually. And that's one of the things I want you to start doing is start off trades smaller, okay? Smaller size, smaller, whether you're trading minis or micros or standard lots. How many of you do scale in or add to winning trades? Say every 30 to 50 pips. You know, if you're scalping, maybe it's 10 to 20 pips. A swing trade, maybe 40, 50, 60 pips, whatever scale of measurement. But how many of you add to winning trades? Okay, I see no, don't scale, no. A single yes. Hey, Nandini, good. Hey, it's good to see you, man. No. I see one yes, okay, out of about 20 or 18 charts here. Wow, I only see one yes out of, it's amazing. Well, congratulations, Nandini. You're the only yes I see so far. You got to, and started to from Mira. Okay, so that's one thing that Peter and I are going to spend quite a bit of time on is position sizing. As my colleague Van Tharp, who invented the term, would add, it's what professional traders do. It's what high-frequency trading algorithms do for the high-frequency trading software programs that control the markets. They automatically do that. Well, we'll teach you how to scale in on successive breakouts correctly. And so failure to scale in, because, you know, I found in my own actual trades, even if I'm wrong 60, 70% of the time, and I will have those weeks or even those months, if I can make enough money by adding to winners on the 30% of winning trades, which, by the way, is what a lot of professional traders do. Like the Chicago Merc for the E-minis traders, those guys, if they're right 28% of the time, you know, they don't sweat it. That's fine. What they care about is how much money they make. The net, you know, unrealized that becomes realized P&L at the end of the trading quarter. And what you want to do is scale it. The way you do that, and the way professional traders do that, is scale into the winners and take a lot of little itty-bitty stops along the way. It's the ones that do work out that you want to add to. Okay, again, tightening and trailing stops, no more than 20 to 30 pips under the inside market. But fail to scale is one of the biggest chief challenges that you need to overcome as an active Forex trader. And Peter and I will show you how to do that. Also, wrong stops. Okay, a lot of you guys are using weak, wide stops. Hopefully, if I were to say, what was the biggest stop loss you took recently in number of pips, the numbers are all going to come in under 20, 30 pips. If you guys are telling me you're taking 100 or 200 pip stops, then you're just donating to the market. You know, you're the fish out there that the sharks are eating. You don't want to be that trader, okay? When you're, what I say is, you know, tight is right. Use tighter stops plus scale into the winners and add to the winning trades as they move. And again, even if that's 2 or 3 out of 10, that can make you whole by overcoming the small stops. I've traded millions and millions of dollars worth of stocks, Forex, E-minis, ETFs over the years since the late 90s. I'm a real trader, and I can tell you guys that's what makes you whole, is learning how to position, size, or scale. It's a lot more, one of my quotes in my industry articles and my expo appearances is, it's a lot more about the math than it is the chart patterns. The chart patterns are very useful to scan and identify good entries, but once, you know, the chart, how to say, the chart's work is done once you have found something worth trading and you're in the trade. It then becomes a matter of money management and P&Ls. And that's a missing equation from a lot of what's out there in the trading industry, because frankly, most of the educators out there aren't real traders. You know, they talk about chart patterns, but they're not real traders. Those are real traders. We know it's all about the money, right? I trade for money. The chart patterns are nice. They help me scan for what's worth trading, yes. But once I'm in the trade, it's all about the unrealized P&L, right? How red am I when I'm wrong? How green am I when I'm right? And how do I manage the trade so that even if I take 7 stops and 3 wins, how do I pull money out of the 3 wins? And the answer is to scale in, you know, because again, successive breakouts can really, you know, ride the trends is how you wipe out small stops. And that's really important you get that right. So we'll learn how to do that. That alone is worth registering for the upcoming premium events. But that's important you get that part right. And I told you what to start doing, so that's a good value added content right there. Okay, not combining candles with support and resistance. And again, only learn candles from Steve Nissen. There's a lot of people out there who copied Steve Nissen. He's the originator who had all the books translated from Japanese, and he's an expert at using them. Don't learn any candle patterns from people other than Steve Nissen. He's the authentic, professional, genuine expert. So learn from Steve Nissen. combine what you learned from Steve with Peter and my training. Anyway, combine your candles with support and resistance levels, and we want to start confirming entries and exits with both. And scanning plus better entry is what I call rapid scanning. So let's take a look at some charts. One of the things that I want you to be real clear on or gain some clarity on is momentum patterns. Let's drop down to the 7-day chart, and let me give you a couple of quick tips here, things that can help you as a trader. One of the things that you want to start looking at is the first big candle. Real simple concept. You can use that immediately for the rest of your trading life. Where the heck is the first big candle on a 7-day chart, and what direction is it? Well, this one would be a sell candle. That would be a red candle. So that tells you, and again, before, I knew this was going to sell based on that institutional. Again, candles are so powerful for a variety of reasons, and I won't go into the details, but that tells you institutional traders are coming in. The ADX climbing tells you they're coming in with mucho gusto, right? They're coming in with some size. So bang, boom, shakalaka. Sure enough, a couple days later, it shoots on down. We get another ADX spike telling us this is likely to keep dropping. Anyway, first big candle, trade in direction of roughly 30 pips under in trend. And even if you do, say, to hit it and then take a stop, you can still always draw out your chart. The cup pattern. This is a bear cup. Always include the shadow. So we got not quite a hammer because the upper shadow here is more than 10% of the whole real body's height, but still big shadow there. Well, sell, okay? Obvious, easy trade. Big candle tells you they're selling it. Now, keep it simple as a trader, and Peter Bain's exactly right when he says you don't need to be a rocket science. So, it helps if you're a workaholic genius, but even if you're not, you can still get all this stuff. The key is look for the obvious and trade the obvious in the direction of the obvious. So there's the first big candle. Again, let's say you're just, I'm kind of simulating the passage of time. Blah da 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 da. Hey, there's something. Okay, well, now I know I should start buying new highs. Real obvious. Ka-ching. I'm an expert breakout trader. I'm good at this. And one of the things I want to do is just start looking for the biggest. And by the way, what measure, give me some metrics, Ken. What are you talking about, a big candle? Okay, the whole real body should be at least twice. Just keep it simple, easy to remember. I'm giving you something you can use for the rest of your trading career as a Forex trader. At least twice the whole real body of any of the previous candles. And when you see that, that's an institutionally driven candle of buying pressure in this case, telling you to buy new highs on each successive new cup breakout. Buy there. And again, wait for 30 pips above the high to avoid false breakouts. And if you bought there and took a small stop, you'd still be whole from the initial entry there. Buy again and so forth. So you got, and again, this was an obvious cut pattern. So if you got that, that's buy one, maybe stop loss there, buy 3. So you got 3 out of 4. And that's the kind of thinking that successful traders look at is where's the momentum signals, and in an absence of those, stay clear, right? Trade the indirectional trend of the single biggest candle. That's kind of real obvious blunt instrument trading, but as a momentum day trader, momentum swing trader, that's the type of signal strength I'm looking for. Where is strength? Okay, as a trader, trade strong, trade hard is what we say on Wall Street. Is it my institutional guys that tell you trade hard, right? It just means press it when you see the signal. Don't try and be the wise guy who says, well, it's on sale here. Maybe I should buy because surely it's oversold and it's going to bounce. Now, that wouldn't have worked out well. Okay, trade in direction of what the big dogs, institutional guys are doing by using momentum wide range candles to get you in and out. So that's a very good, quick, obvious visual that you can learn how to trade, in more details. We get into the advanced stuff, but that's a good basic solid strategy to use in conjunction with ADX. Rapid scans, look for the biggest candle. Where's the biggest candle and where am I at either 7 or 12-day highs or lows, and that combined with what I'll teach you in the advanced training coming up is a really good process to start using. So price action scanning depends on your ability to look for those wide range candles and exceptional strength charts only. Where you guys get into trouble is you overtrade choppy charts. I say that collectively to thousands of traders that will be watching this video in the days, months, and years ahead. Y'all keep too big stops and you overtrade choppy charts. And that's just a function of experience, right? Once you take training from professionals, and we'll teach you, the very specific, as you can tell. And why I like working with Peter Bain, he's got a very methodical, very specific, well thought out, very well performing, very good, strong entry and exit signals he uses, right? I do the same with my signals, and they're complementary, so they don't conflict at all. They dovetail very nicely, and by learning by both, with both of us together, we'll teach you how that all works. So you want to trade the sharpest breakouts at the correct entry price. And I don't have time to get in a lot of the timing nuances, but that's another area for improvement that traders struggle with, is timing. Good trades are usually late to get into and early. They feel late for entries, and they feel like you're getting out a bit too early, but that's how you hit and run. Bad traders try and overguess early entries because they think, well, surely enough, it's going to bounce right here, sure enough, and then when it goes against them, they let it go against them far too long. I did that for years. I made every mistake in the book and then some. Probably had some new ones invented and named after me. It's like I screwed up legendary epic fails. I've blown out trading accounts. I made all those mistakes back in the 90s. The last 13 years, not too shabby. I know how to trade now. So one of the things I learned from that is good entries are usually, and again, it's probably be more helpful with the chart than just talking about it. Okay, wide range candle. Good entries are late to enter. So, you wouldn't sweat it, for example, as a smart trader. You wouldn't say, well, surely, and I know you guys would say this, though. I mean, I'm talking to my earlier self. If I were to get in a time machine and go back 15 years, I would say to myself, Ken, don't worry about buying new highs. That's what you're supposed to specialize in. To the trader at this particular point in time, that might look expensive. It might look, well, hey, it was down here earlier. I don't want to pay up there. I don't want to be the sucker who's the guy buying the top and then it goes against me. I'm not going to buy there because that's too expensive. It's a lot higher than down there. I should have gotten in down there, but up here it's too late. And then you miss out on the schwang. It's a technical term. Anyway, you miss out on the big breakout runner. So what I want you guys to get away from is the thinking that buying new highs is bad. You can, as a breakout trader, you can always buy pivots in an uptrend, as Peter teaches, very smart. That's fine. I like to buy pivots in an uptrend to scale into. I will use a new high above a candle to add to an existing initial acceleration breakout ramp trade. So I might get trade one there and then buy the pullback on scaling in. So that's another strategy that you'll be learning about in the upcoming Success Strategies training course. So one of the things I want you to start doing too is identify the duration moves. Now I don't have time to go into detail because we're running over a bit here, but within a run of a trend line, what's the life cycle of the trade? Start to finish, how many pips does it average? You can use the average trading range. You can use average directional index to tell you volatilities there. But what's the life cycle? And kind of visually plan that out. So for example, in my dollar Swiss trade I'm in right now, visually, the biggest single run is this high, right? From around 953 to 973. So that's the price extension. Again, professional price action trading, we're looking at price extension patterns. So it's kind of cut and paste this range of pips up here and use just under that as my exit target to scale in. My initial stop, or I should say secondary stop, would be right here at 97.20. I'm going to keep it real tight. So if it fades back down, I'm out. If it keeps running up, I scale in, but only up until it reaches the edge or punches the edge of that average trading range up here on a price extension run. So that's the type of thing. That's what I'm talking about when I mean the duration. You always visually map out the trade potential and use that. And that's what I do when I look at my trades. I'm trying to figure out how to scale in and what's worth trading and the rest of it. Using those type of price action patterns really helps develop focus and clarity. And those are two of the things you really need as a trader. And just giving you friendly advice. You need focus, number one, and you need clarity of strength of patterns that are worth trading, number two. So that's what we deliver for you in the upcoming premium events. We've got a multi-webinar. We've got 3 webinars coming up. I'll tell you about those in a few minutes. But are you with me so far? Am I giving you some good stuff? Peter gave you a lot of good strategies, especially I like the charts to avoid. He had a lot of good gotchas, things to avoid, as well as things like the MACD crossovers and death and golden crosses and the candle patterns. And I like to add to that with, how I trade. Now, here's something as a trading coach, I would tell you, in poker we call it leaks. In trading, I'll call it the same, okay? It's a crossover. What are your leaks, the things that are causing you to take stops over and over? You probably have one. What is it? Is it over trading choppy charts? Is it getting in too late? Or is it getting in too early? I'm gonna go out on a limb here and say that it's probably you're getting in too early on weak charts that don't have much trade potential. Kind of like playing poker and you're trying to play 7-deuce offsuit and forcing a hand when you should be waiting for a high pocket pair. Speaking as a guy who just got back from a poker jaunt in Vegas. Anyway, one of the things you want to do is identify your leaks in your game as a trader and figure out how to patch those. Test which of the strategies that Peter and I are teaching that you'll be learning works best to fix it, and then decide how to use that as part of a process, your own personal trading action plan when it comes to using what you'll be learning about in Forex Success Strategies. Okay, so gaining clarity on what the heck's worth trading and how to trade the strongest instruments and leaving everything else alone is something that Peter gave you a really good handful of charts not to use, as well as the correlated yen charts, and I like to add to that too with all the different strategies we got to cover. Now I'm going to wrap up here. We've got just a few minutes left. Fast response times, like a first responder to an accident, on the highway or something. Your goal is to be wrong small while trading to be right just a bit bigger. Okay, so it's trading, successful professional trading. I'll just tell you, it's a lot about the math and taking small stops as a cost of doing business and going for incremental wins that are just a little bit bigger, right? All you need is 55% net, right? So all you're trying to do is gain more than what you're taking stops on and turn the corner from being losing or occasional winning trader to more a scratch trader, like being a scratch golfer. It takes a lot of golfers a lot of years to get to, and then where you can start turning the corner and becoming net profitable in your trades takes longer still. And one of the things you want to do as a goal is work on that, right? And most traders never get to be profitable traders because they're making these errors over and over again. Our goal is, working with Peter, is to teach you guys how to be wrong small and get in on the strongest charts to be right a bit bigger on your entries. So stop waiting so long to exit, you guys. Get out fast. When in doubt, get out of your trade quickly. Now, I don't mean nervous Nelly and you're out at 5 pips or something, but don't give it more than, say, 20, 30 pips on the outside. If you're not in on a strong cut breakout or a strong, whether it's a MACD crossover or death cross or golden cross or candle pattern, make sure that you're getting out quickly when you're wrong. That's really important, that you minimize your cost as a trader. It's in Peter and my both our shared interest in working with you folks that you're with us for many, many years to come. So the only way we can do that is to help give you the success strategies, the tips and techniques that we found from our own trading experience can hopefully help you turn the corner. So it's in all of our shared interests, you guys working with us, that we can help you apply the strategies that professional traders use. So we want to get you up to speed and do it at a bargain, so it doesn't cost you a lot either. So that's another benefit. I want you to develop a thoughtful Forex trade process, whether it's a flow chart or a map that's based on rapid responses. Be earlier to exit is kind of a rider downer, but rapid responses to signals you see. So for example, let me clear the chart here. In my dollar Swiss trade I am in as we speak, I will close it all out at a loss of this hammer support at 97.10, right, or 971. That would be the maximum stop I would take on that chart. That's kind of the obvious support right here. Now, if you were swing trading it, you might give it all the way down there. It's kind of the difference between home retail traders and professional traders. I'm right, so when I'm right, I want to bank the money. I don't want to give it back. I won't say greedy, but I want to take as much money. I want to squeeze as much juice out of this trade as I can. So I can't do that if I'm sacrificing big stops because there's a chart pattern that shows support there. Well, news for you, news at 11, this is not a concrete line, and this is in nowhere etched to be hard support. It's kind of obvious support, but how many times have you thought that would be support, kind of whimpers, and then bang, goes down there, and then you kind of rationalize to yourself, well, I'll give it to down here, and then you take a big stop loss. Stop the madness. Don't do that, guys. When in doubt, get out really, really fast, really short pattern on a drop. Get out, tighten it up tighter and tighter as price goes in your favor. And learning how to do that professionally is one of the things that I'm pleased to be working with Peter on in helping you with this. Okay, so your trading plan, I want you to choose at least a few new Forex entries to trade. Peter gave you a lot of good ones against the yen. Look at the dollar Swiss and others that are taking out new 12-day highs or lows. What's your initial size? What's an entry pattern you want to start testing? Where's your stop? No more than 30 pips. Where's a double position and an exit? So if opportunity doesn't knock, then build a door. That's what Uncle Milton Berle said. And so Peter and I want to share with you an upcoming opportunity to work with us. I hope we've demonstrated value and given it to you. Let me say, Peter, just wanted to say hi and thanks again for being with me before we introduce the offer we've got, but I just wanted to say thanks again for being part of tonight's event. It's great bringing our techniques together to help everybody.
Yeah, this is exciting, Ken. I've taken lots of notes as usual. I like your comments on re-entering on a second cup, momentum wide range candles to get in on, buying new highs, and so on and so forth. So I too learned from you, and a lot of fun.
Yeah, it's good stuff, and more to come, to be continued. So, hey traders, what we've got for you in our Forex Success Strategies training, we've got 3 new webinars coming up on the next 3 Tuesdays, and it's a bargain, so don't worry, it's not any $1,000 hoo-ha like these software vendors sell. It's very good professional training at a bargain. Step-by-step Forex training that's designed to help you start trading the very best of the Forex entry and exit patterns. And what you'll learn as you work with Peter and myself going forward in these events is all the specific entry and exit skills that we didn't have time to cover tonight, and hopefully we've established value that these are in fact good, useful things. Peter and I both taught you a lot of good stuff that even if you don't continue with us, you can still use for the rest and should use it candidly. I'll tell you, good stuff. You should be using these throughout your career as a Forex trader. The goal is to develop a series of training events that can help you potentially make more winning trades more often. That's always our goal, is to put you in the green on what we do. So we want to teach you correct pattern recognition, professional trade management, more on position sizing and scaling. What I saw was only one of you out of, it was like 30 responses, said that you use scaling. We'll teach you how to scale in using our different strategies. I know Peter's got a lot of really good techniques, and he will illustrate for you with current market charts, as will I, and we'll work together on some of these charts to figure out primary and secondary entries to scale in. And that's something that's been missing equation, and that can be a big thing that potentially turns the corner for you as a trader, is figure out how to use scaling for position sizing in addition to all the entry and exit tactics. So what we've got for you is 3 complete 1-hour professional success strategy sessions, and it's a lot more detail and additional strategies we didn't have time to cover tonight, coming up in the next 3 Tuesdays, the 16th, the 23rd, and the 30th. Only time we're going to be offering that this year, so good, smart decision to get involved with that. Our question, as always, is how much would it be worth to you if you could see exactly how to use more details behind and more advanced strategies in your Forex trades each week? If you could make just 1 or 2 winning trades or avoid 1 or 2 stops, what would that be worth? And again, it's a good value. We're not going to be charging $800 or $600 or $400. What we're going to offer for you is the lowest per hour pricing we've ever offered at just $247. So if you make just 1 or 2 good trades, and again, it's open through Monday because classes start Tuesday, and I need time to get the registrations out to all the dozens of traders that will be on board. But it's only $247 for all 3 events with Peter and myself, and it's our deal of the year. It's really good value. That's less than $100 per session. My standard discount rate is $97 per hour for what I do. So this is a real bargain to be working with both Peter and I. And Peter, any comments on the upcoming sessions? Because I'm definitely looking forward to learning from you myself in these, and we'll give them the link here in a second. But it's good to be working with you coming up in the next 3 Tuesdays as we teach them even more advanced strategies that we didn't have time to cover in tonight's event.
Yeah, in addition to what you've said, Ken, what I'm going to carry on with the next 3 weeks, I'm going to give some more alerts on currency pairs, and I'm going to follow the Australian dollar all the way through, because we're looking for a setup based on what the institutions are doing. So we'll talk about that in each of the 3 sessions coming up, and getting into a lot more detail than we did today on trade setups and scaling in, which is one of my favorite topics, and the agenda is going to promise to be quite full.
All right. Well, great. And I'm looking forward to seeing that. See, did y'all hear that? Kind of read between the lines there. Peter's telling you you're getting a case study of actual breakout charts in progress. And I will do that the same with my dollar Swiss and see how that works. And so, like the cliffhanger is for the next 3 weeks, you'll see exact entry and exit strategies on the strongest of the charts out there, illustrated with how to trade with position sizing, advanced tactics, answers to questions too, and we haven't mentioned that yet, but that's one thing excited to do too as well. And maybe Peter, some comments on that. But for all of you who register for the upcoming 3 events, we will answer your questions. So this is intended to be kind of the theme of the event is solve your problems, and Forex Q&A solved with success strategies. So whatever ails you as a trader, hit us with your best shot, and we'll give you solutions designed to help you avoid the problems and struggles that you've been having in your trading. We've never done that before. This is the first event that we're doing that for, and I think that's a great idea. And you came up with this, Peter. In fact, you'd wanted to do this last year, and we just haven't had a time in our schedules to do that. But for the first time ever, we're now doing that for the trading community. So I'm really excited to be able to work with you and have us put our heads together to answer some of the top problems and issues and challenges that our traders are having. So I'm looking forward to seeing what you got to say about that too.
Yeah, well, we're going to give the audience the best of the best, Ken. I'm certainly going to go through my archives and bring out winning trades and strategies that I've used over the past. Well, I've been with the Forex for 15 years, so I have a lot of strategies that I want to pull out and present over the course of the next 3 weeks.
Yeah, looking forward to it. Yeah, this will be a good one. Now, you folks, you have my word on it. It's only, what, $247. I mean, that's a no-brainer for two top industry guys who are expo speakers and all that. We could easily charge $495, and we're both aware of that, but we want to reach as many of you as possible and establish value and credibility, and do it at a very giveaway price, right? And we're not going to be upselling, by the way, anything else. So unlike our competitors out there who would do something at a low price and then at the end say, oh, and by the way, buy our $1,000 software that does it for you. No, we're not going to do that. We respect you guys too much. We want you to be with us for the next 5 and 10 years. And the way we do that is earn your trust with credible, authentic, real training that you can actually use, regardless of what software you're using. And we're not going to be pitching anything else. So that's another thing that you may have seen elsewhere down the street from the less than credible competitors that are infesting the Forex marketplace. Peter Bain and I will not do that to you. We give you our best, and you have our word on it. So this is a very good price, and you've got until Monday to register because classes start Tuesday. So no shenanigans, right? It's a straight price, a good, straight, honest training, and we're going to give you the best we can. Also, I will be adding to the mix another hour plus with me. I'll stick around for up to an hour and a half, and I'm going to be giving you a follow-up webinar in September as an additional bonus to answer questions you have. So we're not going to leave you hanging. After the sessions that we do, I'm going to give you a couple of months to go off and implement and test it out, and then bring back your case studies and lessons learned, and I'll be doing an advanced session for you in September. So register now. The link that I've put together for you is at forexsuccessstrategies.com/winning. And I think that's a good theme because we want to get you guys on the winning side of this stuff. So I will make this the main site as soon as we wrap up here tonight, but it's just $247. You go to, what I want you to do right now is at least type this in your browser and bookmark it so you can remember, forexsuccessstrategies.com/winning. I will put the replay of tonight's event there, as well as send you guys out the high resolution download link, and take a look. We got a lot of good stuff for you guys, and it's a real bargain. It'll be a total of 4 hours training, 3 hours with Peter and I, and an additional hour with me. So it's like getting a half-day seminar for half price, and no upsells or other shenanigans or anything else that we're doing. So you also get high-resolution downloads. So even if you can't make it, or you want to keep these, as you wisely should, for years to come and refer to them, throughout your evolution as a Forex trader, it's a really good deal. And you have my word. It's just solid. It's what I would buy if I was a Forex trader. Even if you're experienced, you're going to get a lot of new stuff that you haven't gotten before from Peter and myself. So look forward to working with everybody. And Peter, thanks so much for being part of this. I'm looking forward to helping everybody with what we're going to cover for them in the upcoming 3 weeks ahead.
Yeah, thanks, Ken. It's always a pleasure working with you, and I'm looking forward to the next 3 webinars. We're going to put a lot of stuff on the table for our audience members, and I'd like to see as many of the members of the audience come back for the 3 webinar series. It promises to be really exciting.
Yeah, thanks. And hey, Sterling saying, how do we sign up? Hopefully that answered. Thanks, Sterling. Ian saying, excellent webinar. Thanks, guys. Much appreciated. Thanks. Dave saying, thanks. Was great as expected. Yeah, Peter and I work really hard for you guys because, it's because of you we're here. So we're deeply grateful to all of you for learning from us and for giving us a chance to earn your trust, which is basically what this whole evening is about, is giving you a chance to see us in action, see some of the very best of our strategies with promise of more to come and updated additional techniques that are things we haven't covered yet, especially with the position sizing and scaling and answering your questions, which we haven't had time to do in the previous events. We're going to make time for that in the upcoming ones to help solve whatever ails you as a Forex trader with specific, here's how I would have traded it differently. Here's how I would set up the trade as a straight answer from both of us. So on behalf of Peter Bain and myself, thank you very much for being here. It's been a real honor working with you, Peter. You're the best in the business for Forex trading, so it's great to work with the best. And all of our traders out there, the best, smartest traders out there. We always attract the smart people who don't want to red arrow, green arrow software. It doesn't work, as you guys know. What works is, learn a few strategies. They're easy to implement and easy to recognize. Make it a system that performs for you. Test it out. Hammer out a process that works and gradually start working on your game so you get better at your Forex trade. So thanks, everybody, for being here. And thanks, Peter Bain. It's been a real honor, as always.
Yes, Ken, thank you very much for sharing this platform with me, and I look forward to the upcoming series. It's going to prove very beneficial for everybody who attends.
Right. It absolutely will be, because we'll give you our best as we did tonight. So thanks, everybody, and we'll see you in the upcoming events. Go ahead and register at forexsuccessstrategies.com/winning. I'll also make this the main page, and I'll embed the replay of tonight's event in the site as well, so that'll be there by tomorrow. But anyways, we look forward to working with you, and I'll look forward to working with you coming up, Peter, as well.
Okay, thanks, Ken. Appreciate it.
Hey, thanks, everybody, and good night.